For those of you out there who receive a pension, you might be wondering, what will your taxes look like in retirement? In this video, I'm going to show an example of someone who has various amounts of tax-deferred account money and a pension and Social Security income, and we'll put it all together and see how the tax brackets are going to play out, depending on how much invested assets they have. In this example, we're looking at a single male, and he has $132,000 in his bank and brokerage accounts, and $470,000 in tax-deferred accounts. This would be like 403Bs, 457s, 401As, 401Ks, IRAs, inherited IRAs, all those types of accounts that are tax-deferred. You get a tax deduction when you put your money in, but then you owe money when you take the money out, and you have to take money out once you turn 73 or 75, depending on when you were born. That's called RMDs, required minimum distributions. Some other background details are this gentleman is retiring now at 67, and he is going to start Social Security now, as well as his pension income now. His pension income is just under $60,000 per year, and his Social Security income is right around $25,500 per year. That's a total combined income for pension and Social Security of $85,500. On the left side of the screen, we're looking at his investment allocation. He's currently pretty close to 60-40, 62-38, and he plans on staying at about 60-40 for the rest of his life. On this diagram, we are looking at the tax brackets and colored lines going across this graph. The 10% bracket is the blue line going across, and then current 12% bracket is a green line. You can see that it says 12%/15% tax bracket. That's currently 12%, but the tax brackets will revert to what they were before the Trump tax cuts in 2026. And the 12% bracket will become a 15% bracket. The 22% bracket will become 25% bracket. 24% currently will be 28%. Of course, Congress might change that, but as of now, that's what the plans include. The blue shaded area is showing their taxable income by year. And from retirement until age 73, you can see this area, and then at 73, it jumps up a bit. That's when RMDs begin. But if you look at it overall, the top of this shaded area is between the orange line and the green line, which means this person will be paying 22 or 25% federal tax as their marginal rate for the remainder of their lifetime. So this is someone with $600,000 of investments, almost $500,000 of which is in tax-deferred accounts. And they are not going to see a huge jump in their tax rate when they reach 72 and begin their RMDs. Let's see what happens if we increase their tax-deferred account size and see if at what point do they get bumped into the higher tax bracket. I've added $300,000 of tax-deferred assets. So now total investments for this individual is $900,000. They're still going to get their pension income and their Social Security income. And then how will this $770,000 tax-deferred account impact their taxes in retirement? Let's take a look. So you can see here that the bump up at 73 brings them much closer to that orange line. At that point in time, that'll be 25% tax. They're still in the same bracket that they were in before. At about age 78, they do cross over into a higher marginal bracket, the 24/28% bracket. They're just barely into it, so I wouldn't really think this is much of a concern. Let's add some more tax-deferred assets and see how that affects his plan further. Now we are looking at an example of someone with $1.3 million of investments, $1.1 million of which is in their tax-deferred accounts and will be susceptible to RMDs. In this case, they are bumped into the 28% tax bracket, and they will remain there for the rest of their lifetime. So what could be done about this? The one option is Roth conversions. But in this case, for this individual, they would have to pay taxes up front in the year they did the conversion in order to save 3% in the future. For someone who has a pension and has Social Security, There's really not a lot of room to do a Roth conversion, but everybody's situation is different. If you would like to see other examples, please let me know in the comments below, and please consider subscribing to the channel. Thanks for watching. I'm Andrew Marshall.